Berkshire Hathaway Chairman and CEO Warren Buffett joining us.
स्टॉक मार्केट रिलेटेड इंटरव्यू वीडियो पाने के लिए मेरे चैनल को सब्सक्राइब करें और बेल आइकन को दबा दें।
A lot of people wrote in and had questions about your partnership with 3G. 3G were your partners in the Heinz deal, and then with the addition of Kraft as well. Let's go to T61. This is from James Shanahan. Mr. Buffett, how would you characterize the relationship with 3G today? Would you still consider additional deals with 3G?
Yeah, I considered Georgie Paulo and his associates, but my primary contact's been with Georgie Paulo Lemon over the years, first meeting him on the Gillette board, and I think he's an absolutely outstanding human being. But a year ago, he pointed out that the game had changed in terms of brands. He gave a talk at some Forbes event or someplace, and that was a full year ago. And 6 months ago, I told you at the Glide thing that brands. It's not as packaged goods are not as good a business as they were. The really strong brands are, but we've learned that over the last few years as the struggle between the retailers and the brands has shifted toward the retailers, and that's why Kirkland is a very, very big brand. Walmart's going more to private label. There's some big forces on the other side. If you got a good enough brand, you can also call your term. Costco dropped Coca-Cola some years ago. They brought them back.
Do you see that ever shifting, or do you think that the game is going to be this way, weighted towards the retailers, except for the biggest brands?
It certainly looks like, particularly with the addition of Amazon to the picture. I mean, when you have Amazon and Walmart fighting, it's a little bit like the elephants fighting. The mice get trampled, and I certainly don't see the retailer's position getting weaker. I mean, you have Aldi coming in and stronger. Walmart's done a very, very, very good job. You had Doug McMillon on, but he carries around that list of the 10 top retailers from the past, and
from every decade.
To remind him, that it's hard to stay on top, but now you've got and a lot of other players too, but two particularly strong players that have got their foot to the floor, and to some extent will be pushing their own brands.
In terms of the partnership with 3G. If the situation has changed, according to both Georgie Paulo Lehman, and to you, if brands are not as strong as they used to be, and as you've said in the past, it's gotten really much more expensive to try and look at any of these other consumer packaged goods companies and potentially buy them. Does that mean the whole 3G formula has kind of been upended? Is it really difficult to make it work if you can't go out and buy another company and then cut costs?
Yeah, well, the acquisition just don't work as well. I mean, for one thing, the prices got pushed up, and anything, almost anything at a price can be good. Not everything, but anything at a certain price can be bad. I mean, if you pay too much, you pay too much, and that doesn't change. And if you borrowed a fair amount in conjunction with it, it takes a while to turn it around. I do not see. Well, we're not in a position to buy additional brands, and I have not thought it made sense as we've seen both prices change and the competitive position change somewhat. I still like I like the businesses we have very much. I'll be happy to be in Kraft Heinz 5 years from now or 10 years from now. I'm certainly happy to be Georgie Paulo's partner. He's a terrific human being and very smart on business. But you can say that we both misjudged the retail versus brand fight as to who would be gaining ground on the other.
Watching what happened to shares of Kraft Heinz on Friday after all that news came out after the market closed on Thursday. I mean, stock was down 30%, and I think for Berkshire alone, that was a loss of about $4 billion, on top of your $3 billion share of the $15 billion write-down. I know you wrote in the annual meeting, or the annual letter, about how there are days, because you have such a big portfolio, $173 billion in stocks, there are days with market volatility being back that you see a swing of plus or minus $4 billion on certain days. I know you're like Dr. Spock. You're completely emotionless when it comes to dealing with market moves. But is there any part of you that gets a little queasy when you see that you've lost $4 billion in a day?
Not in the least. No, I mean, it makes me, assuming I like the business, depends which ones they are, but overwhelmingly during the fourth quarter, the things were going down. They were buying out their own stock. So I'm actually making money that day, without laying out a dime. And then secondly, I can buy more of some, although a lot of them I've got that 10% problem with. But I mean, there are certain stocks I would have kept buying, except I was bumping up against the 10%. But no, I mean, if you paid X dollars a pound for a hamburger yesterday, and you go in today, and now it's at 80% of X, maybe you have a little hamburger left in your refrigerator or something. Do you tear your hair out over that, or do you say, "My God, this is terrific. The price is cheaper"? What else in the world don't you like to buy cheaper than you're paying the day before?
That's a fair point.
If you're going to keep buying it.
That's the very logical way of looking at things, the rational way. Hey, Joe has a question, too. Joe?
Mr. Spock. Dr. Spock is that wacky guy
Spock.
that wouldn't console.
Oh, right, he's the baby guy.
That said, let the kids cry all day.
I finally said something that got your attention.
No, I actually wanted to ask about. I wanted to ask that. I was just talking about Dr. Spock with my son. He was. I don't know. I don't know if you would just let kids cry forever. I think you need to. Anyway.
No way.
No, you can't. You can't. That guy was wacko. I'm trying to explain Freud, too. Another one.
I agree.
Anyway.
Good luck with that.
Can I ask quickly about that 60 Minutes and just some philosophical questions, Warren?
Yeah.
So the basic thrust of this piece yesterday on electric cars was that, at least the way I read it is, in this country, I think we're starting to feel like maybe the subsidies that Tesla gets aren't really a good way to do things necessarily. And over in China, they seem to be going the other way, where they are going to subsidize this. It's almost a state-run enterprise how much they're subsidizing electrical vehicles. As a result, the thrust of the piece was by 2025, they're going to be doing a couple of million, 3-4 million electric vehicles. We're going to be stuck down under 500,000. Is that what we should be doing here, in your view, or is there a reason you're invested over there in electric vehicles rather than here? I mean, is that the way to do it? Should we be subsidizing it completely here in the U.S., or do market forces allocate capital better?
Markets are better generally, Joe. I mean, you know me on that. But that doesn't mean all the time. There's certain, but markets are better. I actually think electric cars, I think you're going to have a lot of people pushing electric cars in the United States, even though the subsidy is going away. I think it goes away at 200,000 units or something like that, and Tesla's hitting it and so on. But no, I think electric cars are very much in America's future, and I think much sooner than autonomous driving. But listen. I'm all for the Chinese doing what they're doing. I mean, in terms of the planet, it's a good thing. So I cheer them for doing it. I don't think we'll need to do it in the United States that much.
But you're invested over there. You're not invested here, right?
Oh, we bought the BYD 10 years ago, and Charlie called me up and said, buy this, and that is totally Charlie's position, and it's done fine, and he keeps in touch with the management and all of that. That is not something that I could not tell you within 20% what the price of BYD is. I don't look at it.
Okay, so that's not your thing. Okay, but it's just watching at it, the spin I was getting from 60 Minutes was that, we don't understand that certain industries you need full-on government assistance or almost subsidies out the 10 times what they are right now to try and win at something, which is not surprising for 60 Minutes. But I was just wondering whether you thought we're going to fall behind if we don't have a concerted government effort to prop up the industry.
I think there's a pretty concerted industry effort from what I hear.
Yeah.
I mean, no, I think you're going to see a lot more electric. And incidentally, I mean, we have an interest in pilot flying J, and so we have certain businesses that would be adversely affected with all electric. But I think we're going in that direction, and I think you'll see the American companies quite aggressive in that field.
All right. I was listening the whole time, Becky. What do you mean that's the only time I'm listening? I was listening. I've been listening. I got nothing else to do here but listen. So I was listening. I just like that. I like that. You know how much I love mixed metaphors. My favorite is it's a walk in the cake. Or there's just so many good ones if you can mix them up. But when they
start working on March. Joe, start working on your March Madness ballot.
I know I won't. I know how you operate, Buffett. I mean, yeah. Why don't you just offer $100 billion to someone who gets a perfect bracket? It's never going to happen. It's never going to It's never going to happen. Ever.
No.
It has happened once, didn't it?
Well,
Didn't the kid win a few years ago with a perfect bracket? Not against
all you have to do is get through the first bracket to win $1 million, assuming nobody else wins at the same time. Then you split the million.
Right. It's great. Though. I can't wait.
But we had 5 of them. 2 years ago, we had 5 of them that got to the last 4 games, and perfect.
That's amazing.
And 4 of them went out on one game, and 1 went out on the other game. But they split it.
What are your thoughts just in terms of looking around, trying to find businesses, trying to find pieces of business versus when you started the game?
Well, it's harder for 2 reasons, one of which is peculiar to us, is we've got a lot more money. So our universe of possible things to do has shrunk from thousands and thousands of things that I used to look at when I had small amounts of money to relatively few things now.
See, that seems to defy logic. I have more money, so I have fewer things I can do. But it's just because a deal, it's got to be much bigger.
Doesn't move the needle. Yeah. So no, there's probably 100 stocks. If we put $5 billion in something, and it's 10% of the market cap, which would be as much as it would be, you're talking $50 billion in up market caps, and $5 billion is 1% of Berkshire's value. So if it goes up 50%, we make 0.5%, basically on value before tax, 40 basis points afterwards.
I'd love to have your problems.
Yeah. So, and then the second thing is, I mean, obviously got way more competition than when we started in really when I took Ben Graham's class in 1951. I mean, the whole world was my oyster because people were not going through the manuals, and you had to. It's easier to get the data now, for one thing. I mean, just with the internet, far easier. And I used to mail away for annual reports and go to the Interstate Commerce Commission, the Public Utility Commission, the Insurance Commission. I went to all those offices and dug through papers, and now it's it takes five seconds for somebody to get the same information.
I'll ask this very fleetingly. Has your position changed on Bitcoin?
No, I mean, it's too bad, but Bitcoin, it's ingenious, and blockchain is important, but Bitcoin has no unique value at all. It doesn't produce anything. You can stare at it all day, and no little Bitcoins come out or anything like that. It's a delusion, basically.
So we've gone from rat poison squared to a delusion. Well, that's kind of an upgrade.
Yeah, I don't. Who knows where we'll be next year? But I'm really sorry it happens, because people get their hopes up that something like that is going to change their lives, and it was a very ingenious thing to figure out how to have a limited supply and make it harder more expensive to create them as you go along, and all that sort of thing. But it doesn't. The function. And this is explained to me by people a lot smarter than I am, but they say blockchain does not depend on, and JP Morgan is talking about creating their own, JPM, and it'll be worth $1. I mean, it's matched to the dollar to dollar, and I'm sympathetic to people that own it.
There are a lot of questions that are kind of like the new Bitcoin questions. We got several questions that came in to ask you about. I'll go to T46. This is Forca Design, LLC. Do you think the hemp and marijuana industry is a viable industry to invest in, even though there are still restraints on how capital can be moved and used? We got lots of variations on this question.
It's an industry that I don't know really anything about, usage or otherwise.
Never?
No, never. No, I couldn't figure out how to do it. I couldn't even smoke a cigarette. You were talking to a guy that doesn't pick up things very fast.
What do you think about college athletes and whether they should be paid? And I ask you this, having watched what happened with Zion Williamson, the Duke player whose Nike shoe blew up on him last week. It kind of reignited that whole debate. And you're a longtime watcher of college athletics.
Well, I'll say this. If I was an athlete, I think I probably should. I would probably have a view on it. I should be. I mean, that you are, I mean, if you're really good, you're of enormous commercial value. And the rules of design are designed to prevent you from cashing in on that commercial value, you know, for some period. It doesn't, so the rich schools are going to win then. Harvard may have a resurgence of football.
This one came in, T28. Mitsutaka Goto said, do you see any irrational human behavior by investors or corporate Americans right now? You're kind of, you and Charlie are kind of like the police of corporate America. What do you see that you don't like right now?
Well, there's always a certain number of people doing things that are designed to take advantage of other people. I mean, the market is so big, and so there's always been people that, you know, maybe it's Bitcoin, maybe it's new issues. I mean, look at all the things that have been created around Bitcoin. I mean, and there's been a lot of fraud and disappearance and all these kind of things. It attracts charlatans basically because the money's so big. I mean, if you go out and do something phony and selling yo-yos or something, there's no real money in it. But when you get into Wall Street, there's huge money, and you can do it with little pieces of paper, and they don't bounce back on you for a long time. And a lot of people get, well, Madoff was the ultimate example, but that's going to happen, and that's why we've got an SEC and why we've got courts, but it'll always continue. It'll always need policing.
There are a bunch of new technology IPOs that are slated to come to market this year. I think back to what you thought about the tech IPOs back in 1999 and not wanting to be near them. These are a little different. A lot of these actually have earnings. You think of an Airbnb, you think of a Pinterest or something along these lines. Is this different? How do you value this stuff?
No, yeah, but the big ones have losses, and some of them report earnings differently than I would report earnings. I mean, we haven't bought IPOs, and if you think about it, you've got a whole bunch of people on the other side who have an interest in marking up each stage of it, even if it's phony. Sometimes they offer one price for the employees that already have the shares, but then they have an artificial price so they can say that this round went at a higher price. They're picking the time to sell to you. I like it when I'm picking the time to buy in a 2008. Rather than having them pick the time when they've decided this is the time we can cash in by selling to you. We're going to do you a big favor and let you buy in. So I have never been a big fan of IPOs, and the valuations are kind of staggering now on some.
Any in particular?
No, not that no.
Nothing you feel like discussing?
By category.
But the category of those that you think the valuation is staggering is based on what? Just earnings per the market for some of these?
I mean, if a company's going to come public, we'll pick a figure, $50 billion.
Okay.
What should you expect it to earn in 5 years? You should certainly expect it to be earning $5 billion pre-tax. I mean, if you wait 5 years to get 10% on your money, and people, they don't sell them that way. You know, there aren't that many companies that earn $5 billion or more pre-tax. There's a fair number, but it's not that easy, and it's particularly not that easy if you count what you're paying the employees and stock options and all that sort of thing.
A question came in. This is T112 from Todd Marshall. He says, "Who wins more at the card game bridge, Buffett or Gates?" Who
well,
wins more when you play bridge?
I probably play 100 times as often as Bill, so that's probably the only game in the world where I'd have a slight edge with him. A very slight edge, and if he probably spent 2 solid days working on, he'd do better. While you bring up Bill Gates, Melinda Gates has got a book coming out on April 23rd. I think is one of the best books I've ever read.
What's it about?
It's about women, and it's about women around the world. It's about herself, and it's very candidly told, and the stories are terrific. And I read it the other day at one sitting. It's only 220 20 or 30 pages, coming out April 23rd. And I think it'll be a huge seller.
That's great. We'll look forward to seeing it. Another question that came in is T55. Steve Pilgrim asks, for those of us who have lived our lives and careers reading and listening to Warren Buffett and Charlie Munger, to whom do they recommend our grandchildren listen?
Well, I hope it's to us. But that would be sort of an actuarial freak. No, there's plenty of interesting writers. But I will tell you this, the fundamentals won't change. You're not going to discover anything new about investments in the next 50 or 100 years. I mean, it's buying a business. You have to know how to value the business, and you have to know something about how markets operate. But you don't buy a business unless you can value it. You have to learn how to value businesses and know the ones that are within your circle of competence and the ones that are outside. And that won't change. And it really gets back to investing is laying out $1 now or dollar purchasing power and getting more back in the future. And you try and figure out, how much you're willing to pay for that bird in the bush compared to the bird in the hand.
Warren, we want to thank you for the 3 hours that you've spent with us today. We truly appreciate your time.
Thank you.